Good evening, guys. My name is KryptOkib, and today I have a very special guest online with me, who is going to show us a little bit about his trading style and how we can find profitable trades in this very, very dicey, not just economy, but very, very dicey trading conditions. So with me tonight, I have DrBobz online with me, popularly known as Zax. So, Zax, you are welcome to this podcast. And I hope whatever we are going to learn from you tonight, we are going to put it to very good use.
Hello, KryptOkib. Good evening, and thanks for having me on the show tonight.
Thank you for joining us today. So, how has it been with the way we all see Bitcoin going up and down, no specific movement to either the upside or the downside? How has it been with you trading lately?
Trading lately has been hell. It hasn't been business as usual. Where you just mark out some zones and put a tape to it and up only. These days, more demanding. It's just crazy trading these days, especially for the past how many weeks now? Like 9 weeks. Bitcoin has been a downward trend. So it's really scary. And even looking at the chart on the 1 month, you see that Bitcoin is currently hanging in the middle of nowhere. So it's really very, very hard to trade, compared to late 2020, early 2021, and middle of 2021, where it was just, easy to just, draw a line. Once it breaks out, I retest to the moon. So it's kind of
that's correct. So how have you been surviving this very market at this very time? And if you can see from the daily charts right on my screen right now, from where the mouse is, that is from 11th of May to this very moment, the market has been sideways. And most times we do not trade ranges. So how have you been trading this particular method or this particular range?
Well, you have to adapt, you have to adapt. Before I couldn't trade ranges, it used to be very difficult to trade ranges. And even when the market was booming, it was actually hard. It wasn't the norm to see ranges, highest Bitcoin can just range for maybe 2 weeks, a couple of days, but now we're seeing like ranges of like 5 days, 10 days at a stretch, 2 weeks range, So you have to adapt, you have to adapt your tools, sharpen your knowledge to new ways, new ways of thinking, new ways of doing something. Because as a day trader, you have to always adapt, to your strategies so that you can always make bread from, whatever the market throws at you, Yeah. So
that's correct.
Is very important.
Okay. And, okay, thank you for that. So from this very view of adaptation, not every one of us has the knowledge or the right tools to adapt in such markets like these trading ranges. It's even worse on altcoins at the moment. So it would be very good if you can just share us your chart and walk us through how to find trades and how to execute trades in this period of time when everything is just boring. Should I use that word, boring? So if you can just share your chart to us and walk us through how we can find trades, good setups, and how we can execute them with this condition, it will be very, very perfect to see.
Okay, so as a day trader, you have to have some tools that that you can use. All right.
Yes.
Have some tools. Yeah. First off, I make use of top-down analysis. Okay. I mean, analyzing the market from very high time frames to, down to the minutes. Okay,
Yes.
that helps you to like weigh the market in compares, know what's up, right?
Yes.
And a very beautiful tool that I use is TradingView, just like every other person. TradingView is like a very robust charting software that with it you can easily map out areas in the market that you want to do business at, right?
Yeah.
For example, if you're in a premium subscription, or a subscription, it might not be premium, it might be pro or any other subscription. Okay, it lets you to choose your time frames. Like what I'm looking at is the 12-hour time frame, which
Okay.
with the normal free software, you won't be able to get something like a 12-hour time frame, right?
Okay.
And you see that in a 12-hour time frame, Bitcoin has just been ranging over the weeks.
Yes.
So if you pick out a high here, if you pick out that high there, maybe shade it up down to this area, this big shade here.
Yes.
Then you take a look at here that it has tested to the weeks. Okay, the weeks. Let's take out the week. Let me take this out. This is expansion. Okay, so you see that you can. Let me take this one off. All right, so you see that you can actually see the market in detail. Okay, then from here you can easily tap down to lower time frames, right?
Yes.
Yeah, so when you come down to lower time frames, like maybe 4 hours, which every other person can see, let's go down to 4 hours time frame. You see how the structures evolve, right?
Yeah.
So this shaded area was the trade I made some time ago,
Okay.
mark the bottom up, So basically you're looking at other areas like this, other areas like the demand zone in this area, right?
Yeah.
On a very time frame like 4 hours. Okay, you mark it out. Then in these areas, you kind of find maybe an order block or something.
Yes.
Give me a sec. Let me close this trade. All right. So, well, I think I just missed closing my short somehow. All right. So, you map it out on the higher time frames. Then from the higher time frames, you gradually come down to the lower time frames, the 1 hour, the 30 minutes, right?
Okay.
With that, you can easily, see how the trades are doing and all of that. Okay, let me give an example of a particular trade that I took, right?
Yes.
So I do use the concept of support and demand. Okay, supply and demand. Sorry.
Okay.
So
I wanted to ask that.
Yeah, so I try to find one of the techniques I use. I find supply or demand areas, then watch out how the market reacts around them, and combining with market structure. So for example, somewhere here, right?
Yeah.
Okay, something like this, right? So this is the low that you've been looking at on the higher time frame. So the market makes a low, okay, combination of like high volumes. The market makes a low, this high volume area. So as the market makes a low, comes back into this range, which means there's a lot of trapped traders here.
Yes.
So with the trapped traders here, it's going to actually keep on moving, so that these traders get liquidated in the process. So which means that to keep on, keep on moving at some point. But there's always like a mitigation or something, comes back and tap again. So most people call it the 3-tap setup, right? Where it taps one, then the last one, 3-tap, they enter here and it moves, okay?
Okay.
But here's how I look at it as, I see it as like a demand and supply zone. So come back to, let's say, the 30 minutes time frame from here. So you see this node here resting on this higher time frame area, right?
Yes.
Probably kind of mark it out, like just mark this area out, right?
Okay.
Let me shade it. Let me just give you this color. Okay, so once I map it out, okay, then look at this structure here. This is a market structure break,
yes.
Right?
Yes.
So the market has created a, if you watch here, the market has created a low, right?
Yes.
Created a lower high.
Yes.
Created a lower low down, right?
Yes. Yes.
Okay, you know that this was the range low, and the market tapped into this range low, created this wick, then made a high, right?
Yes.
Then made a higher low, right?
Yes.
Broke the structure up, this structure here, by forming a higher high. So here's a high, here's a higher, right?
Yes.
So I'm looking for areas on this place to enter a trade.
Oh, okay.
Okay, we might
that means
somewhere around.
Okay, that means your area of interest would then be the last lows that led to the move that broke structure.
Exactly. So I'm looking for some sort of OB here, like an order block or something. Okay. So I look for an order block around here, something around here, something like that, this area. So once I get it tapped in here, okay, I make a tap and my stop is here. And I'll be looking for either the middle or the range highs. So I'm looking for the middle of this whole move, okay, the middle here, okay, so something around here.
Okay.
Right. Maybe 1:1, okay. So that's more like a scalp. This is like a 30 minutes time frame. So it just comes in, take it out. Maybe I can just sell off maybe half of my what's it called, my size, right?
Yeah.
Move my stop to profit. To entry. So I found out that this is another area, okay, but this area didn't actually break structure while coming down. So there's a high possibility that, this area will give way. I don't know if you understand.
Yeah, I'm getting you. But if you can explain more clearly, it will be better.
Okay, so what I mean is, so this is like a structure here, right?
Yes.
Okay. This is another structure here that formed a low right here, right? But there was no break in structure. There's no like people call it a changing character, like the market did not make a lower low, structures now, higher highs, higher lows, lower lows, and lower highs.
Yes.
There's no lower low here. So the market did not actually make any change in pattern, nothing, right? Just started and went up, which means higher low. This is a low, higher low. This is another higher low, which means the market is bullish, right?
Yes.
So the market has calling freely, the market has changed right there. So you just look at the structure, enter, and track it up. So if I sell half here, I'll be looking for this area or this range high to take out these equal highs here, this here. So this area. So if you play it out, that's how I actually traded this. So you see that it taps the yellow zone. Actually, I left around there. But later it will just come around, swivel around and go back up again like today. So that's what I look at most of the times, right? Just take a look at market structure. How is this market playing out? I just enter my trade. That's what I do. That's what I do most of the times. And I no longer trade altcoins. I no longer give altcoins that instead of trading altcoins, I better trade only BTC, and I do that with size, like a lot of size.
Oh, okay. So if I may ask, is there any special reason why you stop trading altcoins?
I found out that there's no reason trading altcoins. Like, there's no reason. There's no advantage in trading altcoins other than they are like amplifiers. BTC has to move for altcoins. Like altcoins make a move. BTC has to make a move for altcoins actually
Make their own move.
Yeah, make their own move. So they are more like amplifiers to whatever Bitcoin is doing. So it means if Bitcoin moves, for example, 5%,
yes,
in a day, the only thing altcoins can do is maybe move 5%, move 15% or 20%. Okay.
Yeah.
And this is a leveraged market. This is a leveraged market. Altcoins, like, they move a lot. And if altcoins can move, let's say, for example, if my trading account is like $10,000 and I'm risking, let's say, 1% of my trading account, which is around $100, right?
Yes.
Which means if I'm risking $100 for maybe a 3R on BTC, on
yes.
What's it called?
Altcoin.
On altcoins, right?
Yeah.
I'll have to wait for, let's say my risk is around maybe 5%. I'll have to wait for the altcoin to make what's it called, 15% for me to make 3R.
Yes,
it's
yes.
not so.
Yes, yes.
But Bitcoin, let's say Bitcoin moves 5%. I'll just set my stop loss in a way that if BTC moves, let's say BTC, for me to make that same 3R, BTC needs to move for 6%. So if BTC has to move 6%, which means my stop will be 2%. So it's almost the same thing. So I'm basically focused on one trade. I'm basically focused on one pair. It doesn't mean that I don't, from time to time, try to do other, with other altcoins. Yeah, but my focus is on BTC most of the time.
Oh, okay.
So BTC is the major focus. I try to find out what's going on in BTC. I just come in, take a look, and I go.
Oh, okay.
So basically, market structure. I just look at market structure. For example, the trade I had this afternoon. BTC dumped. So just here. So yeah, so here, I've been saying it on Twitter that we are going to kind of run up these ups and try to come down. So for example, take a look at this place. Take a look at this place, right? So the market makes like a low here, right?
Yes.
Yeah, and it did not break structure, right? Like it makes this low, comes back.
Yes.
It did not break this structure.
Yes. Yes.
So we are expecting that if it breaks this structure to the downside, maybe towards this dotted line, right?
Yes.
And probably comes down like this, right?
Yes.
And tries to come back somewhere here. You would like to short from here so that to continue
downward,
move the downside, right? But it didn't happen, and what it did was like just come somewhere around here and zoom off, right?
Yeah.
So if you look at it on the lower time frame, let's say 50 minutes, right? What was that? All right, so you take a look at here. Yeah, if I had gone for this trade, I would have missed it. So you see, there was a break in structure here, although it was a week, but the BTC has traded here, right?
Yes.
So you'll be looking for some sort of
Downward
tap in,
movement.
yeah, then completion maybe to the upside, probably targeting this area here.
Okay.
Yeah. So as you can see, but you see that at this point in time, let's say here is where you are entering. So we missed it, like it did not tap into here.
Yes, yes.
Today you find out that this bearish OB was tapped, like this bearish area was tapped.
Yes. So with this analysis now, are you still trying to say that BTC play by the structure?
Yeah, if you're actually looking at the microstructure of Bitcoin, I would say that yes, most of the times it does play, but even though that on a bigger scale, before I actually trade, I actually look at other traditional markets, XPI, NASDAQ, and ES, and all that, to see how they are faring.
Yeah.
Bitcoin is never in isolation. So whatever happens to those markets is correlated sometimes.
Okay.
Yeah, so I take a look at what happens in those markets and try to base my judgment on it. And I don't trade all the time. Like, no. I trade maybe London session or New York session. Yeah.
And any particular reason why you trade those sessions?
I think it's much more predictable around that time.
Okay.
Around maybe 1 p.m., 2 p.m. my time. Like, yeah, that's when I want to come and check if those areas that I've marked out before, if there's any interaction with them. Okay.
Yeah.
So for example, this is let me show you here now. So this is 27th May, right?
Yes.
Okay, 7th May around 2 p.m. See, this is 2:30 here.
Yes.
This is 2:30. Okay, you see what happened here, and market created a new structure low, right?
Yes.
Now take a look at what happens the next day around that same time. See that?
Yes.
See that?
It happened into the yes.
I was waiting here. Yeah. So let's say I was waiting here. Okay, with my alerts. That's why I said it's really nice having a premium TradingView. We have a bunch of alerts.
Yes.
So I set my alert, somewhere here. As it's approaching here, my phone beeps, and I know that okay, this is what's going on. I will just come over to the screen and try to see what's happening. Just go on to the 5-minute time frame. I know that the red area is my zone where I want to do business.
Yes.
I don't know if you understand.
Yes.
So I'm here waiting for it, right? Possibly have my stops waiting for me somewhere here. So I have my stops here and I have my laddered buys.
Okay.
So usually I used to have like 4 or 5 buys.
Okay.
One, 2 on one side, then a big one on the middle.
Okay.
And possibly the last 2 ones on the edge. Then I have
that's nice. Above. Okay, looking at this chart now, from this eye you drill with the horizontal where the price line is, that last eye you marked with the horizontal line, that is a break of structure, right?
Is it here?
No. By the left, where you have the line, the black line.
Here?
No, a bit down.
Yeah.
Yes. That is a break of structure there, right?
That's the break of structure.
Okay, so when a break of structure happens in the market, are you still looking to short the upper supply, or you are just looking to take longs only?
I'm actually looking to take. It depends. It depends. It really depends. It depends. So, for example, now this is like a larger supply here, like the
Yes,
market structure in here, right?
yes,
And meant a lower low, right?
yes,
And other things, there hasn't been any lows since there. Okay,
yes,
so
yes.
here as an example that I would like to punt a short here. Yes, I'll likely punt a short here. Two things
Okay,
that can happen. Two things that can happen. Watch on a higher time frame. You see that this has been a downtrending market. This is a
yes,
structure, right? Went
yes,
back up, get a new low here, right?
yes.
But it hasn't broken this structure here for me to say we are back up. So this is
Oh,
more like
okay,
a structure. This is in
okay,
5 minutes.
okay.
So I'm
So,
basically
so that break of structure right there will be like a local break of structure, a mini one.
yeah, so
Oh,
yeah,
okay.
in this particular, you can be bearish on a higher time frame and
Yes,
bullish in a very small time frame. So
yes,
right now,
yes.
I'm looking for shorts that will react to this place. So if it breaks the structure, I'm fine. I'm fine that it hits my stop.
Okay,
I'm very fine that it hits my stop. It might be 1% of my account, might be 2% of my account. I don't care. I'm fine.
okay.
I'm totally okay. So, but what I'm trying to illustrate is that at the end of the day, for this trade, what picks is this first blue line, the second blue line,
Yes,
and the last blue line, bringing my total buy somewhere in between around this area.
yeah.
So with my stop here, I'm kind of targeting the lows here to kind of sweep
Okay.
this place here. So once I enter a trade and it doesn't seem to go my way immediately, I cut it because it's a
Okay.
scalp. I don't swing. Yeah, don't swing.
Okay.
I rarely. So once I wait for it, it doesn't move. I'm out. I'm
So,
out.
so if like this price right now is coming up, but is above the red box, but not yet at a stop loss, do you cut it or you wait for it to hit stop?
I wait for it to hit the stop. I've
Okay.
factored it in. Yeah.
Okay. Okay. But then if it's like going back down, but it's sluggish, it doesn't have the momentum to fall. So you can hesitate, right?
Yeah, it pretty depends on what's actually happening, based on other things, other metrics too that I
Okay.
look at. Yeah, I look at a lot of things.
Okay.
Uh, Sometimes I look at liquidation data on Kingfisher or High
Okay.
Block. I
Okay.
look at CVD on kind
Wow,
of
that's a lot of things to look at.
yeah. I look at CVD. I just try to look at many things to give me confidence to like stay in the trade.
Okay.
So basically, my mapping out structures where I actually enter is not entirely based on market structure.
Okay.
It's a combination of things, right?
Okay.
I use a software, Kingfisher. I used to use High Block, but Kingfisher is a bit more advanced. Let me see if I can
Okay.
pull up. Let me see. Can you see my screen?
Yeah, I can see your screen still.
So it's actually a paid service. Okay, with that,
Okay.
I can find some zones. With that, I can find. Okay, let me set it up. Okay, so it's a pretty heavy website, so I'll just give it time to load up.
All right. One more question about the supply and demand. So recently or lately, we've been seeing many times that there are no retracements in the market. Let me put it that way. So when you identify a zone of interest and or you place your buy orders or sell orders, most times price comes back there, it just front runs the zone. You do not get filled. So how have you been able to cope with this and get your orders filled? So in short, let me put it, how do you draw your zones to cover for the front running that happens in the market?
Well, depending on what's actually happening in the market, sometimes these things happen and you just clueless. You just let them go.
Okay.
Sometimes sometimes I chase the trades. Like no one is perfect, Sometimes
Yeah.
chase the trades. I chase the trades. I chase trades, So I use market order. I market in and chase the
Okay.
trades, especially if it's a zone that I know that hey, for example, if I'm using Kingfisher and it's a liquidation cluster, maybe where lots of persons got liquidated, someplace like this now. So here now with this very big week, right? This big
Yes.
week here, right? With
Yes.
this very like this is a lot of volume here.
Yes.
This is like a lot of volume here, which means a lot of shorts, got liquidated here, right?
Yes.
So I know that a lot of shorts got liquidated here, and if a lot of shorts got liquidated here, it means that what's it called? If a lot of shorts got liquidated there, it means that
A lot of buys.
exactly a lot of buys
I
happen
mean, a lot of
there.
sell. If shorts are liquidated, then there is a lot of sales.
Yeah, a lot of sales, happen there to close the position, and it's going to force the price down. Okay.
So what sign exactly do you want to see whenever you think the market is about to front run you and for you to jump in? Is it a pin bar, bearish engulfing, or some sort of cross-section patterns?
No, I don't look at candlestick patterns. I don't.
Oh, okay.
Before, yeah. For example, now, this red area. Let me color this. Let me color this one ash, right?
Yeah.
Let me color here green, right?
Okay.
So let's say this red area is where I want to enter.
Yes.
But I start seeing very long liquidation candlesticks like this, right?
Yes.
And the price that's trying to taper in, I will market sell in here and place my stop just above this liquidation wick.
So won't you be fearful if you have your stop loss just above the liquidation wick? Because sometimes the market will just come back into the main zone you are waiting.
Yes. So I take that into consideration too. Like I said, I will be looking at liquidation data. A lot of persons have been liquidated.
Yes.
So if it hits up, I'm good. I'm fine. Maybe I just take like maybe $100 or $150. I know that I'll always wait for the next trade. Maybe like maybe 0.5%, like 0.5% of my total portfolio or something like that.
Yes.
So I usually enter with 1% whenever I'm chasing the market. I don't enter with a full percent.
Oh, okay.
Yeah, so it might be just action so that I know that if it doesn't work, I'm fine, And when the market gives way for maybe $200 or $300 from where I entered, I'm out. So for example, this is like 228 900, right? And I see this kind of wick here. Okay, this one has no volume. So I see this kind of wick, right? And as it's closing, I'm out, and that's like 300. So if I entered with half BTC here, I'm automatically making $124 from this place.
Yes.
$134 here. So something
that's
like
correct. That. Wow. This is really beautiful.
Yeah. So I was trying to pull up the Kingfisher.
Okay, I can see it now. Oh yeah.
Okay, so this is what I mean by CVDs, and CVD is like cumulative volume delta, right?
Oh, okay.
So yeah, it's like a difference between it's like a difference between buy and sell orders. Okay, but you know that for every buy there is a sell. Okay.
Yes.
But during some certain times, one is more aggressive than the other.
Yes.
So when one side becomes the taker, when one side crosses the other book, you understand?
Yes.
That one becomes the more aggressive, counterpart of the trade. And what CVDs measure is just like the measures the aggressiveness sort of one part. Okay, so for example, if prices are going up and CVDs are also going up, it means that there are a lot of buys coming in, right?
Okay.
But if the prices are going down and CVD is just heating up, it means that a lot of shorts are fresh shorts are coming into the market.
Yes.
So sometimes there is a divergence. There is a sort of divergence. Prices are actually going up, but the CVD is nothing. Prices are just shooting up, but there is no. It's not organic. So when there is divergence, what happens with divergences? It's more like what is going to happen. So I don't know if I can find one here. I was actually taught how to use divergence by the KryptOkib made a tweet about that one time, but I really learned about it from Ape Trade of Trading Riot on Twitter too. So fine. Look at this. Take a look at this place, right? So you're seeing here, you see that price made a higher high, right? This is the price here, right?
Yes.
But right here, it made a higher high, right? Like a significant higher high.
Yes.
The CVD here is almost equal.
Yes. It's flat.
It's flat, but here is making a higher. You see what followed?
It was a big drop. Yeah.
A very big drop. So that's one of its applications. Something like that. So second way I applied Kingfisher is by looking for liquidation zones. So I can use this to find liquidation zones, and I can use it to match my confluence. So for example, let me pull this. One sec. So there are like liquidation zones, like and there are liquidation clusters, So with the liquidation theory, prices tend to are attracted to high liquidation zones, right?
Yes.
So using Kingfisher, look at this high liquidation zone here at 30,300 means that the high probability that prices will rally into this high liquidation nodes and pick up these places, right?
Yes.
Yeah. So likewise today, that BTC was rallying. Yesterday it was rallying around 31,300, 31,400. There was a very large liquidation around 29.8, 29.8, 29.3, right?
Yes.
So they made a tweet and was like, prices will definitely try to come back, and we see what happened today. Prices, you see here. So there was a lot of volume. A lot of people were waiting around up higher 29. 29.3 to buy, and you see that a lot of people got filled there, and a lot of people got filled there. You see the big, yeah. So you see that prices are started picking up, right?
Yes.
Then if I'm using this with the concept that I actually shared earlier, you see that here is an order block for me.
Yes.
So you see that here is an order block for me, and I'll use somewhere here as my liquidate as my stop loss, right?
Yes.
Then, which means in between here and somewhere here, I'll make my 4 different buys.
Yes.
Okay. I'll make my 4 different buys, which means my average will be around maybe 29,367. So it means if I enter this trade with half a BTC, I'm up around $150, right?
Wow.
So once it starts bouncing, the volume is not interesting. This is like this is a 1 hour chart, and it's 30 minutes into 1 hour, which means the volume is not really interesting compared to what we have here, right?
Yes.
So I try to start cutting my size. So I have $150 already, right? once we move up a little bit, I'm a discretionary trader. I don't have like a systematic something. So once it starts moving at my discretion, maybe when it gets to, let's say, 29, 700, when I must have made like $200, I cut it in half. I know that when I cut it in half, my will drop a bit. When it drops a bit, I'll move my stop loss just a little below my entry, and I watch how the trade plays out. So if it doesn't move that much, I cut it, and I take my profit. Profit is profit for me. That's my slogan. So if you look at the liquidation here, the way it's arranged, Kingfisher also made it look a bit beautiful here. So the green line price here is the liquidation zones, the short liquidations, and the ones below is the long liquidations.
So does it show the price line where those liquidations are likely to happen before it happens, or it shows it as it is happening?
It shows it before it happens.
So for
example, look at this liquidation zone here at 29.7. So there's a very high probability that if prices enter into this zone here, it might react, but it's very small compared to something like this one here. Like this one here.
Yes.
So basically, personally, what I'll be doing is I'll be waiting for a small scalp short around 3,300. And when you take a look at that, you see that that is where a sort of supply kind of happened before. So when I see these and I enter into a trade, that's it. And some other things here too. This is liquidations. It helps me. For example, if I'm trading and here's my order block and I start seeing lots of liquidations, this yellow stuff here is my liquidation indicator, sort of. So I try to find out what's going on here, and I try to enter it. I think you just had that beep now, and you know that that's that's for. So you see, waves is crossing 8.75. So I was shorting waves all the way from 9.
Wow.
All
the way from 9. That's a lot of profits.
That's some profit depending on the size. Okay, so I shorted. I've closed in a little bit here, and it's still going down. I think I've closed it finally. So I started shorting around 9.18, closed a little around 8.7, 8.6. So it's just that I wasn't paying attention. I should have left this trade to play out down into this shaded areas. You can see it just starts with shaded area, right? Okay, my screenshot. Okay, it's not showing. Okay, it's not showing.
We are still on Kingfisher.
I wish you can just see my screenshot. Let's see if you can. All right, so this is what I'm talking about.
Oh, okay. This is waves.
Yeah. So you see me shorted around 10. Okay. So I have my FTX account here, connected to TradingView. So if you're using FTX account, FTX, you can easily connect your FTX account from TradingView. So I started shorting.
That's lovely.
Here, 30 here, shorted another one here.
You shorted where is that? Can I see the setup that gave the shorts? The short setup.
Okay, the short setup was basically from Kingfisher.
Oh, okay.
Yeah, so I just did this stuff here, right? This stuff I've been scalping it all day. So this is more like what's it called? What's it? A double top, something like that. And I expected prices to just come back into this pocket, more like the neckline, then continue more like something like this. Goodness. Looking for, so more like from a double top. Okay, so break the neck of the double top, then come
Yes.
back into this market
Yeah, to
and
retest and go down. Yes.
continue something like that. So this was the structure I'm trading here. So as you can see, this made a double top, came back into this pocket, and all the way down into this what's it called, ash area. So basically, I tried to use liquidation zones, okay, together with
Yes.
market to find my entries and my and my exits. So basically, that's that. So
Wow. Wow, that's a lot. So with all these data to look at to make profitable trades, don't you think when you exit with on a $200 move, don't you think you are leaving more money on the table?
well, for me, it's all about not losing for me. It's all about not losing my account. Okay,
Okay.
so no matter no matter how much I make from a trade,
Yes.
right? So far, I didn't lose that trade. So far, I didn't mess up that trade. Profit is always profit for me.
Wow.
Yeah. So once I make that $200 move, okay, and I usually go in with like size
Yes.
compared to my account. So and I always have stop loss, in place.
Yes.
So if it moves that 200, I just like the momentum trader. Once it just moves, take my profit and I watch the rest. If the rest is not giving me what I want, there's always another trade. That's what I tell you.
Yes. Yes. That's right. That's right. That's a lot of information for tonight. You've done really well to acquaint us with your style and method of trading. only gurus can trade the way you trade. But I believe one day we will get there. And other people hoping to learn from these things, I hope they will love what they've seen and they will be able to have the confidence that at least while in a range market, there are still structures, even in ranges, and they can find some trades which are quite profitable to trade from. So, Zax, if you do not mind, I would like you to share your handles on your social platforms so we viewers can see. And if we like to connect with you, we can easily connect with you.
Okay, I am on Twitter. Let me see. One sec. Okay. Okay, so I am on Twitter at IC_Zax. IC underscore on Twitter at IC_ZACS.
Okay.
Yeah, so it's not a big account. It's not a big account, so it's just a small account, and I try to tweet basic crypto stuff,
Okay.
stuff that I think help people in the crypto space, and the little I learned, in my crypto journey. Okay, for now, crypto is what I do full time.
Okay, that's lovely.
Yeah, I'm also on Telegram on the FTX Africa group. Yeah, you can always hop in on the FTX Africa group. And ask questions too. I think I do have a personal channel too, but I better not talk about it now. It's a bit dead, right? So for now, reach me out on Twitter at ICZax. Yeah.
Okay, thank you very much. So I hope when next we need some more beautiful analysis from you, we will oblige your call.
Yeah, definitely.
Yeah, thank you very much for coming on this show tonight, DrBobz. We really appreciate your time.
Thanks for having me. KryptOkib.
Yeah, welcome. Thank you.
Yeah.